If you can downgrade to increase your disposable income, then please do that. Cut those unnecessary expenses. Take a bit there, take a bit there, take a bit there to increase your disposable income. And once you've done that, now you have more disposable income. Let's assume that your disposable income is now 5,000 Rand and you save the 5,000 Rand for 6 months. So in 6 months' time, you have 30,000 Rand that you can increase or that you can use to invest in other people's businesses. So let's assume that you take 30,000 Rand, you invest in that, in your friend's business that is in catering, for instance, to buy catering equipment and also to increase a bit of branding and marketing, and some of it maybe use it for increasing stock for them to be able to sell more. So as a result of that, let's assume that that business gives you an additional 10,000 Rand a month. So you've just increased your income from 40,000 Rand to 30,000 Rand to 40,000 Rand. So now that your income is at 40,000 Rand, you don't stop saving the 5,000 Rand plus now the new 10,000 Rand. So now you are now using 15,000 Rand per month. Let's assume that you save that for the next 6 months. Let's calculate. It's 15, 30, 45, 60, 75, and 90,000 Rand within the next 6 months. So when you have 90,000 Rand that you've saved in the next 6 months, imagine what you can do. There's that friend of yours or that cousin of yours or that niece or nephew that is running a small business. How about you take a bit of those savings and you invest a bit of that into different businesses? So you buy your shares, you buy yourself some shares into these small businesses. And let's assume that, those businesses, they're doing well and they succeed and they all in aggregate give you an additional 20,000 Rand. Let's say you split it into 4 and you invest in different businesses that gives you 5,000 Rand each. So those 5,000 Rand each, that's 20,000 Rand plus the 10,000 Rand that you have, that you would have been already getting every single month. So now you have 30,000 Rand that you actually are earning from passive income. Remember, that money you don't have to work for in order for you to get every single month. So every single month you have an additional 30,000 Rand. This is over and above the 30,000 Rand that you are already earning as an active income. So your income has now doubled. It's now 60,000 Rand. So now you evaluate to say, okay, I was using 25,000 Rand in order for me to survive. Now I'm earning 60. So that means that you are now below 50% of your current income. You continue to do that in order for you to now, the 25,000 Rand needs to be 10% of your living expenses. Once there are 10% of your living expenses of your income, so your income, let's assume that your income is now 200,000 Rand and you are now only spending 25,000 Rand a month. Right, so now you can increase your living expenses from 25 to now 40,000 Rand to make it 20% of your current income. So now you can use the 160,000 Rand, as an additional income, as an income that you can send back to work in order for it to work for you instead of you working for money all the time. So you see, that's the 80-20 rule that you can use in order for you to achieve your financial freedom. Someone asked me how feasible is that rule. I've just given you examples that you can use the 80-20 rule in order for you to achieve your financial freedom. It can take you 6 months, it can take you 12 months, it can take you 18 months, it can take you 2 years, it can take you 60 months, it can take you 120 months, which is 10 years. But guess what? Whether you do it now or you don't do it at all, but 5 years from now, it will be 5 years from now. So you can either choose to do something about it and achieve your financial freedom, or you can just think 5 years from now, it is a too long time to work on your financial freedom plan, or you can take action and make sure that you achieve your financial plan, or sit back and just wait for 5 years to come. And guess what? 5 years from now, it will be 5 years from now. So 5 years from now, it will definitely get there. So you can either get there being financially free, or you can just sit back and still get there with your current situation, or even worse, because inflation takes place every single year. Ladies and gentlemen, please don't forget to subscribe, like, share, and comment all the questions that you may have below. Until I catch you next time, goodbye.